Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 22nd of July. There have been several weeks now of pretty quiet times in terms of company reports, but in terms of next week, we are certainly back with a bang. We'll come to that in a moment. In the meantime, the broader markets have seen something of a rebalancing of gains so far this year. Obviously, previously it had been largely driven by a small clutch of mega cap technology stocks. There's been something of a rotation over recent days in the States out of technology and into smaller cap stocks. On the one hand, these are seen as being better value, and on the other hand, of course, the possibility of a rate cut from the Federal Reserve in September, which is now pretty much nailed on in terms of the market consensus, is also seen as beneficial for smaller companies who need to borrow to increase their business. In terms of the UK, there's been a number of things going on. It's slightly ironic that the UK is now seen as relatively politically stable, particularly compared to the likes of the States and France at the moment. And with a reasonably resilient UK economy and a warming of sentiment towards the UK as an investment destination, the FTSE 250, the more domestically focused index, has actually risen so far in the year to date by 7.1%. In terms of the other indices, year to date again, the Dow Jones is up by 7.9%, S&P 500 by 16.2%, Nasdaq by 19%, FTSE 100 by 5.4%. So, turning to next week, one of the highlights will be the start of the half-year banks reporting season. We're going to get some numbers from Lloyds Banking. Lloyds Banking is something where it's one of the sector leading exponents of a cost-income ratio, although it did spike slightly at the quarterly results, so keep an eye out for that one. Obviously, it's a very large player in the mortgage market, so it'll be interesting to see whether there's been any increase in demand. And also, it's one of those banks which is moving quickly towards a digital presence, and no doubt there'll be some update there. In the meantime, the shares are fairly generously yielding a dividend of 4.7%, and the shares have risen by some 30% over the last year or so. Also going to be an update from NatWest, again stock specifically. It'll be interesting to see whether there's any update on the planned float, which was abandoned when the election was called. And also in terms of NatWest specifically, it's tended to be the preferred play in the sector, so something else to keep an eye out for. Yield here 5.1%, and over the last year shares up 34%. For the banks as a whole, we'll be looking out for the normal sort of themes. Shareholder returns, both in terms of dividends and any potential buybacks. Obviously net interest income and net interest margin, which have been slightly to the detriment of some of the banks in the States in this reporting season. And probably equally importantly, any situation and update on customers' defaults in terms of bad debts. Elsewhere in the UK, there are a raft of other companies reporting, to mention but a few: ITV, British American Tobacco, BT, Vodafone and Unilever, while similarly in the States there's also a great deal to look out for, the likes of Tesla, Google owner Alphabet, General Motors, Ford and Coca-Cola. Thank you for watching. Have a great week.